The following is a presentation of TFNN. Live at TFNN, the Money Masters. Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling out here with us. We have the Dow Industrials right now up 141. Nasdaq's up 39. S&Ps are up 20. We get gold up 15. Silver's up 54. Bonds down 30. King dollar back 28 ticks. Euro's up 39. And the yen is flat. And the bounce is on. Boing!
Just in time for the holidays.
Hey, there's no doubt about it. Well, yeah, and what you have, folks, is that, you know, the downdraft's there. But I can tell you, looking at this, you know, the dailies, when you always get that fast price destruction at the end.
Yes.
And you get the light up of volume, which we did. Now, watch what happened. You get an expansion of volume on the daily, but what you had going against the weekly is you had lighter volume.
Okay.
So going against the last May swing points. So what that sets up, folks, is a bounce larger than most of.
And you're looking at
so you're looking
at the ETFs.
Yes.
So on the SPYs, if we put that on a weekly, so put that on a weekly chart out here for folks.
It's 25% lighter volume, Rose.
Okay.
800 billion versus 1.1 billion. 800 million versus 1.1 billion.
Got it. Yeah. Yes.
And what happens there, which is really neat, is that because this leg was so far down, I mean, it's just going to be a field day. You know what I mean? Because you'll get an expansion up that's going to be further than we think.
Right.
And then the bulls will think you're going to higher highs. The bears will be scared.
Yes.
Right? And let me tell you, folks, we're going to the June lows, okay? So it's just cool.
But June lows and maybe even to the October
worse.
lows.
Oh, yeah, no doubt. No doubt.
Yeah.
You know.
Now, what's also cool about the weekly charts,
well,
okay, so this is a weekly chart. This goes back to 2009.
Okay.
So the other beauty of last week.
Man.
Yeah.
Wow.
So that's what I was showing, you know, while you were traveling, I was showing folks, and I used both the indexes as well as the ETFs out there.
Right.
But I said, you know, so take a look at it. Last week we had a bunch of celestial things going on.
Yep.
Okay, you know, 3 days back to back to back. Okay.
Right.
You had price and all the fear in the market coming down right into a price channel that went all the way back to 2009. So with your back being up against the wall, it was right where you wanted to be for either side of the trade. But, you know, since the market had moved down, it's like, okay, this is the place where you want to be to take your position. If you're wrong, you're wrong. You can switch.
No, absolutely. And, folks, if you're driving in your car, what Steve is showing us right now is a chart, as he said, and the channel that was so beautiful because it started from 2009. Now, the first time it hit it was in 2012, and it's hit it 3 times. Now, this is where this is going to get interesting, okay? Because when... this is really cool. Okay, so check this out. For you folks that even had taken any of my classes, right?
Yeah.
And this is a deal that is so weird, man. It's crazy, okay? Because it's like, how does the market even understand that line?
I know. That's always
right?
That's always the wild thing.
Here's the kicker. What I've found is this. That the harder that it comes into the line, the more it's giving you a clue.
Yeah, giving you some information.
Now look at the last 2 times.
Right.
So what's happening here, folks, is this: is that it came in with the same velocity as that it came in with May, which is not good. It's lighter.
That's right.
So
That's right.
But if you were not going to break it, you would basically would come in with dramatically lighter volume. So, you know, it did what it got to do. I mean, when you get on 120 S&P points, 100 points, you can't expect more than that.
No question. And, you know, certainly off of the highs, even, you know, going back into September, you know, you'd look at it and say, nah, is it really going to get back down there?
I know.
You know?
Believe me.
And sure enough, it did. But it is always amazing, especially this longer term. Now, there's so many benefits about understanding these longer term trend lines or channel lines, however it is that you're using them.
Right.
Because if you break them, which you know you're going to go back and retest it to try to get back in, okay, at some point in time. Doesn't have to be the following week.
Right.
But it's going to go back and try to test it, and if it fails, boy, that really sets up a long-term change in trend.
It does. Huge,
you know,
too.
and so that's why even just knowing that the market had moved down there was
huge.
You know, was pretty cool, and it's across the board. Now the Dow itself, the actual Dow broke the longer-term channel line out there
That's sweet.
And so
yeah, see, that's dynamite.
That's right here.
That gives you the confirmation that that's what we're going to do.
Yeah,
that's what it comes down to.
So the Dow, the top line number broke through it. Right now, this week, obviously, it's going to try and get back up in there, which it can. Right. And I suspect that it will give us a little bit larger bounce. But what it's done is it's cracked that first level of ice, right? I mean, it's put some. So not only is the channel line strong, but the reality is, it truly broke it, closed below it.
So watch this. This is wild. And you hear us talk about this a lot, folks. Now, most of the time when the Dow is doing this, it breaks the top side. And we're saying, that ain't real. It's coming down.
That's right.
It's great. Because now, see, that's the same way. And this is what kills the bulls. It breaks the down side, right?
Yeah.
Sell. Last week on CNBC, it was really great. When I was even on the road.
Yes.
I say, okay, all I need them to do is tell people not to buy right now. Sure enough. Bingo! That was it. They're on this. No way, bang! That was the bottom, and I says, okay, here we go again.
Yeah.
You know what I mean?
Yeah.
So they'll wait till it gets to a higher high, and then we'll be on again. Bonds.
Yes.
So check this out, folks. We had talked. I think the last time we talked about this, and specifically what I'm talking about, maybe about 3 weeks ago, we talked about China. Okay.
Yes. Right.
So everyone's yapping that China is our biggest
debtor.
Yeah, debtor. Okay. Bottom line, they made money hand over fist.
Right. They really have. They've made a ton of money.
Yeah.
Right. Selling us goods and taking our bonds.
Yeah. Totally. So now it gets even better though, because this is where you absolutely have to wrap your head around the United States of America, folks, and the dollar. And, of course, I just came back from the gold show, okay? So that's Armageddon all over the place. People in gold for 10 years and haven't made any money, okay? It's disgusting. That's the bottom line. And they're out there again. And when I talk about out there, you get speakers up there, and they're telling them all again, this is the best time to buy and hold. The thing that's sick about the gold market, when you do it out here, I'm not kidding.
Yeah.
These guys that are up on these stages, they tell them, buy.
Yes.
Just like any type of advisor, buy, and keep it. And what has happened, okay, is I've seen so many people make zero money and lose money.
Yeah.
Okay?
Yeah.
It's disgusting. It is. And I went into one session, and sure enough, buy. And I'm looking up to myself, this is just unbelievable, man. And then I have people coming up to me telling me that, it's the end of the world. It's like, folks, we already went by the end of the world. It's over. Okay.
Yeah.
Gold's going to go higher. Yeah. Gold. I can see gold hitting 2250 easy a couple of years from now. Okay?
Yes.
But the aspect that from 282 to 1900, 5,000, it's not going to happen.
Yeah.
Not going to happen.
Yeah.
Now I'm going to go back to the bonds again. I'm going to show you why. Okay. So the numbers come out again this morning. Bonds.
Okay.
Who's buying? Who wants our debt? Okay. If you know anything just about cash flow, period, folks, is that what ends up happening is this. If you have cash flow, you have everything. Period. End of story, okay? Well, guess what? There's not a country. I'm going to go through these countries and the acceleration of them buying our debt. And they're scrambling for it now. I'm talking about scrambling. And I'm talking about every single country. So here we go. Okay, you're gonna love this. Okay, now China's
look at that.
Now China's got less. Now the reason China's got less is that they have less money because they're in a recession.
That's right. Okay.
And they're trying to do everything more internally. But check this out. Now I'm going to do two different issues. The first issue is countries that have already had over 100 billion of treasuries, and now this is just from August. Okay,
yes.
So it's okay. Belgium, a 54% increase. Taiwan, a 40% increase. Hong Kong, 33%. Luxembourg, 29%. Switzerland, 24%. Russia, 18%. Brazil, 14%. In total, folks, those right there are 1.2 trillion. Okay, that want the U.S. dollar. Now, these are countries that had less than 100 billion, but are ramping up. Norway, 163%.
How about that?
Mexico, 90%. Ireland, 79%. Singapore, 51%. India, 29%. Thailand, 24%. Canada, 22%. And
another 482 billion.
The bottom line, folks, okay, is that's why the dollar is king dollar. It's going to continue. That's why the bonds are going to stay low.
And always will be. And always will be.
Well, and I think so.
As far as a worldwide currency.
Well, and you know what's also happened? The euro has just gone from 26.9 down to 25.1. Okay, meaning in reserves in central banks around the world.
Okay.
The writing's on the wall here, man.
Yeah.
You know, the writing's on the wall. So it's pretty wild.
Well, you know, so when I hear people talk about, even this morning, I think maybe it was Forbes or somebody on CNBC talking about trashing the dollar. And I don't, you know, I just kind of, and I just said, you know, that rhetoric is so far off base with regard to how people would interpret it.
Well, it's off base. Mathematically.
That's right. Then you got, that's right.
There's no doubt.
Yeah.
There's no doubt. I heard that same thing, and it was a shame he wouldn't answer the question. He just go back to the same four things. No, this, and this.
Yeah.
I'm telling you, folks, get your head wrapped around it, because you're going to hear more of it.
Well, like the reality is that, and I know this, you know this from having traveled around, and anybody else who travels around the world knows this as well. You know, it used to be in the early days when I was traveling around the world, I would always go ahead and convert my money.
Yes.
Then I found out they didn't really need to do that. All I needed to do was travel with U.S. dollars. Just
bring
smaller
$1 bills.
That's right. Just have smaller denominations.
Exactly.
And you could use it every single place you went. It didn't matter whether you were in the countryside, but the U.S. dollar was taken everywhere.
No,
I mean everywhere.
Big time.
Communist countries, socialist countries, it didn't matter where you traveled to. It does not work the other way around.
No.
You could not come here with euros, with pounds, go into a restaurant, pay for your meal, and you couldn't give them gold or silver. You couldn't give them euros or pounds.
No, it's wild. It really is. And, you know,
so how is it ever going to go away? That would take such a total shift of everything that it's just never going to happen.
And I would say that we saw the shift. I mean, I think that's what I mean, that we've already been to Armageddon.
From the March area or
even from 2001. I mean, realistically, from 2001. I mean, the dollar was 121. The dollar got destroyed, no doubt. I mean, that argument's real. 121 down to 70.
Right.
But you know what? That 70's 3 years ago now.
That's right.
You know, we're at 80. Okay? Not that that's a huge amount. It's not. Okay? But trends take a long time. And there's no doubt that yen. Yen.
Oh, yeah.
I gotta start learning Japanese, man. No doubt. Folks, get your head into Japanese, because the yen... let's see, it's not the end of the month yet, right? It's going to be way over it by the end of the month, though. So we get about another 10 days.
Yeah. You know, well, it had a nice, it had certainly a really nice move the last couple days. Friday took a little bit of a time out. Now, what is actually cool about this is the daily chart on it, and I'll remove some of these lines off here just to show you what's kind of amazing. So if we take a look at it on the daily chart, so from just simply the most recent swing point high to low, March 15th, down to the low of September 14th, the 618 retracement, from this swing point right here to here, 1.618. From here to here, 1.272. Here to here, move of a move.
Yeah. Right.
And everything to just at least slow it down just for a little while.
It's time to back up.
That's
exactly.
right. Which puts a little bit of energy in our market.
Steve Rhodes, Tom O'Brien, absolutely. You stay right there, folks. We're coming right back. Dow is up 160, NASDAQ 41, S&P is up 20. We're going to be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling out here with us. Right now, we get the Dow up 152, NASDAQ up 40, S&P's up 18. And we're looking at Steve's chart, and this is one beautiful chart, man.
It really is. So, you know, we're taking a look at the U.S. dollar, Japanese yen. So
That's crazy.
I know, as prices moving up, you know, the yen is getting weaker against the dollar. So right now it's starting to back off. But on Friday now, so Thursday you came in with really the second wide-ranging bar on the way up. And I told people, I said, here's what's going on right now. It should slow down. It should stop and move back just simply because of just expansions, Fibonacci numbers, expansions between swing points. I mean, it actually did everything about as spot on as you could. You know, a retracement off of a swing point of 0.618, then a 1.272 expansion, and a move of a move. I mean, really had everything to say, okay. I said, you know, if you were in this trade here, you might want to consider taking some profit off the table.
Take your money, honey. You got it.
But don't go short this, okay, because you were coming in too hot, too strong. No, instead, look for the pullback on this one. You know, and it is amazing just, you know, and it's a daily chart, too. So daily chart has even more meaning than, you know, the intraday charts that we look at. Yeah. So it's so worthwhile to really understand expansions and contractions of swing points and Fibonacci numbers.
No doubt.
Earlier in the week, I had read something. I sent the article off to Larry. It was something on Bloomberg.
Okay.
And I sent the letter off to Larry, and it was talking about Fibonacci numbers. But there was a quote in there by Buffett.
Okay.
That went back to
that was the DeMarc. He's great on publicity. I saw that.
Yeah, exactly. You know.
Yeah.
And so Buffett was like, no, they just never work.
Yeah. No, I know. Right.
They work, folks.
Yeah.
You want to be aware of them.
Oh no, totally,
You know,
totally.
so.
It cracks. Yeah, we know it's the whole same old racket. Do you know what I mean? And the thing that always cracks me up is that the aspect that when you go down, it's volatile.
Right. right. Well, I don't know. I think the bears today are thinking it's volatile. With the market going up.
Oh, yeah. No doubt. Oh, you're right. You're right, probably. Yeah, no, I can see that. Let's take a look and see, well, it's going to be hit. I'm going to pull up the volume first, because I expect, folks, that we're actually going to get a little expansion in volume today. Well, we don't have it yet. And because, there it is in the NASDAQ, though. See, it's in the NASDAQ.
Well, the NASDAQ, I mean, you've got Apple up $21, Google up $14, Priceline up $8.
Yeah. There's some action. Right.
Yeah, there is. And, and really, you hate to say it's all about Apple, but Apple...
Oh, it is.
Yeah.
It has
when
to
you're
be.
It's still 17.5%, I think, of the weighting structure inside the NDX 100.
No doubt.
With the weighting structure that large, you've got to be paying attention to it. I think between Apple, Google...
Yep.
Who else is top? The top four represent at least 30% or more of
it's more money. It's more. The last time I looked, it was more money. It was pushing. You had Oracle.
Oracle. That's right. That's right.
Oracle's a big structure. Now, you know what you want to look at, too, folks.
Microsoft would be one of the ones right up there in there too.
Is that one of my computers blew up on Thursday, right before I'm going to do a presentation. So I hustled and got another computer.
Yes.
Now picture this, folks. This is how these are getting commoditized. It's Apple. I mean, it's Microsoft 8.
Yes.
Beautiful computer, $750 or something. Okay. And when you see what Windows 8 can do, folks, okay, I mean, it's sick. So picture just a regular computer. So you see it. You have all the keyboard. You touch everything. It's all incorporated in one deal. I mean, they really have something. So keep an eye on it.
Well, look. So this was your first experience with Microsoft 8, just as an operating system, which always takes a little bit of.
I've only had 24 hours. So we have to do a presentation.
Yeah.
And it worked.
Yeah.
Easy.
So you've got that aspect. Now you're used to your other computers.
And I
you've
have
got the
an
touch
iPad.
devices, right?
Exactly.
You've got between the phone and your iPads, or what have you.
Which is important. That's right.
So now when you're actually using this as a laptop, what's your experience? I mean,
It's dynamite.
I mean, it's not like you were disappointed, right?
No, I loved it. The reason being is that what happens is this, is that, the tablets are nice if you're shopping or something, do you know what I mean?
Yes.
But the reality is that, when you get the keyboard in front of you, and then certain things you just go faster and just go across, you know what I mean, like that.
Yeah.
And it just works. If we know anything about Microsoft, it takes them years, but they always get it. And they seem to get it right, and then they start eating everyone else's lunch.
Yeah.
And I think Apple's in trouble because of that. I mean, I really do. And what does happen is that you need a touch screen to do it, but I can't see new computers not having touch screens. I mean, this thing was only $720 or something, right?
Right. No question. No question.
And I didn't have time to shop, folks. Okay, we had all of an hour to shop, to run around and shop because the thing had just blown up. It blew up because one of the bulls got hold of it. There's special bears in it.
I love it.
Steve Rhodes, Tom O'Brien, all you Tigers and Tigers, as you stay right there. We're coming right back, folks. We ended up 150, now it's like a 38. S&P's up 18. We're going to be right back.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor. And now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling out here with us. Right now, you get the Dow up 148. NASDAQ up 39. S&Ps are up 20. And you're going to love this headline, folks. This is people that are not listening to TFNN. U.S. existing home sales unexpectedly rose in October.
Yeah.
Like, where have you been, whoever just wrote this? Now, this is the headlines, okay? So let me read it for you. This is on Bloomberg. This is hilarious. Okay, so sales of previously owned U.S. homes climbed in October, indicating gains in the real estate market are being substantiated by cheap borrowing costs, for sure. Purchase of existing houses with closing increased 2.1% to 4.79 million rate, exceeding the median forecast of all economists surveyed by Bloomberg.
Hey, they just need to survey you.
Man, oh man, I'm telling you, man, this is...
Well, look, you continue to see the interest just really ramping up in the Tiger Real Estate Investment Opportunity Fund,
right?
You know, out there,
right.
And you're traveling around different cities, so you're certainly getting a wide breadth, too, of the folks that are out there that are trying to figure out what to do with their investment capital, how to,
exactly.
you know...
And what happens, folks, if you do have an interest in real estate, come check out what we're doing. We opened a fund. It's Tiger Real Estate Opportunity Fund. Check out the white paper, because you can't do this across the country also. That's what's going on.
Right. Yeah, there's pockets, there's markets where you've got great opportunity.
Where it really works. Yeah. In a big way, not in a small way.
We're going to get you to do another online workshop.
I'm going to do one. I'm actually going to get. I'm going to get the date today, actually.
Yeah.
I'm going to get the date today.
Yeah.
So
I think that'd be good because I mean that's what you're, we know our listeners listen to multiple channels and so forth, and you get all the smart money. That's what they're doing.
And online is where it's at. Education online is where it's at. Let's go to Danny in Atlanta. Hey, Danny, what's going on?
Hi guys, I was wondering how the attendance was at the Gold Show and what was the mood of the people there.
The attendance was pretty good. Well, I talked to the guys. They had. I was just talking with Steve about this because to me Well, here I'll give you the exact numbers. The pre-registration at the Gold Show was 1,900. They thought they were going to get 400 or 500 registered there. So, to me that's not a number, meaning that's a very small number. But I think that's the normal type of number, Danny. And the mood there was people have lost a fortune.
Okay.
And the mood there is that, unfortunately, they still think Armageddon's coming, and gold's going to go to 8 million.
So, what do you see with the gold contract going forward?
I see. This will be a nice bounce. This will get us to about 1780. Then we'll probably pull back to somewhere around 1600. And I see gold in a couple of years. You'll be at about 2200 or something. And
actually, I've pulled up the daily contract on gold. I was looking at it over the weekend, and really, it's already made a triple top test, which takes you back into the you did it back in the November 2011 time frame in the 1780ish price point. You did it again in February of 2012 at 1792. You did it again in October of 2012. So I think if it gets up there, that's where it gives it up again.
Yeah. Danny, have you ever been to one of these gold shows?
Yes, many years ago.
Okay, so it's not unusual what I'm saying, folks. That's the bummer. And I've tried to, I can tell you flat out, they didn't invite me back this year, okay, to speak because of, the way that I speak.
Gold,
you know what I mean?
Gold's priced in dollars, and it's
and the dollar's going higher. Okay, so it's that cut and dry. I get along with them all. Don't get me wrong. Okay, but they don't want to hear reality. Okay. The people do, but, like anything else, management is a different ballgame. But it's cool. The sad thing that I've always seen, and right from the get-go in this market, is that for some reason, and I was trying to explain this to people even 5 years ago, for some reason, they think Armageddon's going to come. And what I've found is this, and I've asked many of these same people if they ever actually seen really Armageddon or have they ever seen really tough times, and most of them haven't, but most of them have believed this whole scenario. And I was trying to explain to them, and I wasn't kidding. Well, if you really think that, go get an M16, because no one's going to make any money. And this is where I go with this.
No, totally.
Let me tell you something. I had, like anything else, it's easier when you had a personal deal with this, and I did. And what this was is that I remember the first Arab embargo.
Right. Okay. So back in the late 70s.
I absolutely thought that Armageddon's going to be the end, man. Well, I didn't go after the oil. I said, well, we better arm up, man. We better get going, right? And you should have seen it. So picture this.
That's great.
I was saying to my friends, what do you mean you don't have any guns? What do you mean you don't have this? They're looking at me like, O'Brien, what just happened to you, man?
That's great.
But it happened to me.
Sure.
Once I realized that, man, oh, man, and it took me a year and 2 years to come out of it, right? And then when I come out of it, I says, man, I really went off the deep end. So I've already been there. So it's easier in the context. When I'm talking to someone else, I'm telling you, man, Armageddon doesn't happen. Do you know what I mean?
Yeah.
So it's, and I think, okay, so now that's on the contract. Now there's going to be a lot of money made on the equities. I think the equities can double, for sure. You know what I mean? And the first acceleration up is right now. I think we're going to have a dynamite bounce. It'll be a year and a half. The unfortunate part, the biggest part that I've seen at the Gold Show in particular, is that they tell people, you hold it forever, and we know that doesn't work.
Doesn't work on those equities.
And it hasn't worked. No. And let me tell you something. If it doesn't work on the gold stocks, it would never work on anything.
Yeah.
Yeah,
good point.
Cooking, brother.
Thank you.
Have a great one, man. Have a safe one. Let's go to Mark at Fort Collins. Hey, Mark, what's going on?
Too much, Tom. How are you?
I'm doing great, man. You having a good day out there?
Yeah, good. Steve, how are you doing?
Good, thank you.
Good. Hey, quick question for you guys. I've got about 5 or 6 different funds I can flip my retirement around into, and I flipped from cash into the market last Thursday. I have to do it before 10 or noon Eastern time.
Okay.
So I actually got a little fortunate because that was pretty much the low of last week to close on Thursday.
Huge. Yeah.
So I flipped quite a bit of money, and I divided it equally into the S&P and a Russell 1000 fund, which is close to the IWM Russell 2000.
Okay.
And so what I'm looking for is, want to get the meat of this bounce. And like I said, I have to bail out before noon Eastern on any given morning. So I'm wondering if there's any kind of another turn date I'm looking for, bounce price that you guys are looking for.
I would say next Tuesday, Wednesday-ish time frame is probably something to be looking at. We're just going to have to, you got to play this, as you know, one day at a time and watch the volume as it starts coming into swing points. I think that first, that gives you priority. And so, you said you're, in the small cap, so I think on the IWM, you've got to watch it as it hits the November 7th high out there. Right. And if you're coming in with more than 65 million, then no reason for it not to.
And see that,
and then you come right over here to.
Yeah, and even and I think so. This is interesting. So when we're looking at Steve's, what date is that? That's
September 25th.
Okay, so there's divergence here, and this is what it is, folks. The September 25th on the small caps came down with volume, but see, the S&P didn't.
Right.
Okay?
Right.
So the number, another date you want to keep your eye on is September 13th, and that'll be the lows of it.
Yes, yes.
And that's a big number on the S&P, man. That's 14. That's 1444.
I'd be thrilled with that bounce.
Well, let me make sure I just gave it the right number, but I believe that's the right number. I had the SPYs up there, but I think that's the right number. 1 second. So, 1435. 1435, right? But that's game. It's game because, that's not that far up, really. It seems like a lot, okay? But all that's really do is getting it to ice of the way that we had come down on the October 19th level, too. Do you know what I'm saying?
Yeah, no, and then look, it all lines up. I mean, the low of September 13th lines up with the swing point from the November 2nd, from where you saw the downdraft coming in off of November 6th. So I think that's where you really target it. And the candles will give you some kind of clue and information. And, I'd look at price and swing points and volume before I'd be paying attention to the, let's say, any lunar or other celestial turn dates.
Okay. And then last, do you have time for another quick one?
Sure.
I was looking at the South African gold, Harmony, GFI, and so forth, and I didn't pull the trigger the other day.
They held.
Friday.
Yeah.
Wondering if that'll come back down and test and say, on dailies at least they broke with volume, even though they didn't do it on the weeklies. Will it come back and do a test fairly quickly? Or
it doesn't have to. No, they held. Yeah. They held. Yeah. You had that GFI down pat, man.
I know.
See that? This is where it gets interesting, folks, okay? I remember when Mark called, but I know how hard it is to buy them like that. But you see what happened? That went into that with 40% lighter volume and rejected it.
Yeah. Yep, I know.
Okay. Now, what happens is this, is that the buy in that gold market is always, you get a picture of this.
Tough to make.
I was talking to a couple CEOs, and we bought, okay?
Right. Yeah.
And what ended up happening is that they were so scared. I said, I'm telling you, man, it's fast price destruction, no volume. Now, and I want you to picture something, folks. So the management of these shows now, I think, but the CEOs love how I think.
Yeah.
And you get a picture when I'm talking to them, and they know, they're saying, okay, where do you think? What do you think?
Yeah.
This one president said to another, and I didn't know this one, he says, well, what does he do? He says, well, he does this trend. They really don't know what he says, but I've known them long enough that, I've caught some good trends, and they know I've caught the trends. He says, well, he does this thing, with these trends and this. He says, but, just listen to what he has to say now.
He knows what the shareholders are thinking.
Yeah.
Okay.
No.
Yeah.
Well, what ends up happening is that when there's fair, they've seen me buy at the show when there's fair. They couldn't even believe that when I told them. I said, no, we're buying right now. And they look at him. He says, see this place? He says, I says, I'm telling you, it's fast price destruction. This is the end of the first leg. I says, guys got another 4 or 5 months of trouble. I said, but there's going to be a nice little bounce here. So it was funny. It's funny doing it because you're going to picture something, folks. As I'm saying this, I'm saying to myself, am I going to lose an advertiser? I mean, it's it's pretty. So you get all that at the same context. You know what I mean? It's like, imagine you give someone advertising money and say, oh, the stock's going down.
Yeah.
Oh man,
I love it.
Cooking, brother.
Well, thanks, guys.
Alrighty.
Have a great one, man. Have a safe one.
Bye.
So we get a bounce. This must be a hard rubber ball. These are the types of hard rubber balls I give Harley to play with, man.
That's good. Totally. That's good.
Because what happens, folks, is that they really bounce and they don't break for a bit.
Yeah. Well, now here I've been showing this chart. And so on Friday, what I did also was showed the listeners on your show. And I said, okay, here's so we've gotten the candle signals for reversal. So that came in on Friday across the board, everywhere, all different kinds of candle signals out there. And that's what candlesticks are. They're reversal reversal signals out there. Then I was showing just simply this very tight bearish channel that the euro had been traveling in.
Right.
And I said the clue is going to be, can the euro break that top side? And if the euro does break that, that's going to be your energy.
Oh, that's so cool.
That really puts the move. And that's going to be the difference between a short covering rally and then a actual real rally.
Yes.
And what I mean by that, folks, is because when you have the euro getting stronger and the dollar getting weaker, you then have more of a valuation issue that's going on and the actual fuel for the market to move, in order for the market to move higher.
No doubt.
And that's that's what we're seeing right now. I mean, it's at the top of its range. It's busting out of that trend. So you're seeing a change in trend in the euro. And what really shocks me is that you had this really large butterfly expansion, 1.618 on a daily chart. That's really stretching it. And the euro only has been able to pull back to that 0.382 level.
Yeah. Right.
So it's really,
it's going to be a long, drawn-out affair.
Yeah.
No, totally.
It is.
Totally.
So we are seeing the bounce out of that, and what that sets up is, in my opinion, sets up more than just a short covering rally.
And no, I agree. No, I absolutely agree. Yeah, there's no doubt. Because we've gone, the acceleration down was long enough, and the time frame's right.
Yeah.
Thanksgiving... The day, there's only a half a day of trading, folks, the day after Thanksgiving. But let me tell you something. I've seen some runs on that day that were extraordinary. The biggest run I've ever seen, I think, on that, you talk about throwing darts, was on that day.
Yes.
It was like 1994. I mean, it was sick. And then the market croaked on the following Monday. But on Friday, it was a field day.
Yeah. Well, really, the market has had, it's given us everything. If you go off of the June 4th lows to the high in September 14th, you're going to see it came back to a 0.618 level. It's the same thing, the same exact pattern out here, coming off of, I think it was December 19th, all the way up to the highs. You get a little bit more than a 0.618 pullback, but it's it's been very kind of symmetrical, if you will. Both time-wise, retracement-wise, which is why you want to be able to have those tools on your system just to understand what's going on.
Oh, you're going to love this. So picture this, folks. I was in, where was I? Let's see. So Friday I was in San Francisco. Saturday I was in Denver, but I go home Saturday night. So on Sunday I was checking out some properties that we had bought last week and the week before. And when I was going into one of them, right, and I was looking and I said, okay, I wanted to rearrange a couple things, right? And I was looking, I says, okay, hold it. I want to move this, move that.
Yeah.
And then all of a sudden I looked, I says, hold it, no. That's perfect. That's a perfect right angle, right?
Oh, that's great. I love it.
Funny?
Oh, yeah.
And what happened, this is what happened, which is really cool, is that at one point, I wanted to take one of these doorways out. That's what it was about. There's two separate doorways. I was going to take one out. And I says, no. And I was almost like at the point to really actually tell him. And then I stopped moving back. I said, oh, no, I don't want to take that's a perfect right angle.
Look, isn't it wild? The best architects out there, they naturally are able to draw based on Fibonacci relationships.
Totally.
I mean, that's how they draw. That's how they see.
No, totally. Steve Rhodes, Tom O'Brien, appreciate you growling and prowling out here with us. You stay right there, folks. We're coming right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll
you'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling with us. Don't forget, you stay right there, folks, as we're going up to Newton, Massachusetts, 11 to 12. Basil Chapman, Tucson, Arizona, Larry Pesavento, Dallas, Texas, Darryl Martin, David White back here, Ken Shreve out in California, and then we'll be back here 4 to 6 with my show. And
so we're talking about Walmart before, during the break. You know,
okay.
It's priced out right now at $68.37.
And so, and this is where, folks, you're going to be able to get a sweet clue. I suspect by right now or by the end of the month. And what it is, that was a breakout that was real, number one, and then it was a breakout that from 1999.
Yes.
Now, if bottom line is that when that happens. And if Walmart stays above that number, you have to pay attention to that, meaning that, okay, the whole market could go. That's right.
That's the number. Okay, the number 70 and a quarter.
That's right.
So 70.25.
And now we're underneath that, and we came off at the top with highs. Okay.
Yeah.
With volume, rather.
You did. You really, yeah.
I mean,
3-4 trading sessions
monster
ago.
Volume.
Yeah.
Okay. So that's the first part. Now the second part's going to get more intriguing. This is what it is. So if you match up the market, I expect you're going to get a big bounce here, right?
Yes, yes.
And this would be really cool. So pitch this. You get a huge bounce, and then everyone's going to think that the market's going to the moon. Watch Walmart. If Walmart's still under that number, that's giving you huge clue that, okay, no way, Jose, we're going south.
Yeah.
And what Walmart's going to be about, which I'm elated about, what it's really going to be about is it's going to be about the amount of briberies that did in different countries, the amount of businesses they put out of business.
What was the last one that they just, last week?
Now they got them all. Not all the countries.
Okay.
I mean, once they, when they got caught in Mexico, folks, they're putting people out of business left and right in Mexico, or they're not allowing new people to come into business. I'm talking about everyone. When you go to different countries, you're talking about people that are just starting out. We're not talking about we're not talking about a conglomerate putting out someone else that's big. We're talking about, putting out people like anyone listening out there that's trying to start a business.
Sure.
I hope they bury them, man. I hope they absolutely bury them. I think that's a little personal, isn't it?
It is.
Oh, man.
It's all right.
So, yeah.
All right, so what else is moving out in the market here? So you got Google is up, so let's go see what's behind Google. That's up $16. See if there's anything inside that.
No, there's no action there.
No, okay.
Yeah. Intel, I think Intel's got a new CEO, right?
Oh, did they?
Yeah.
Okay.
So now look at that. That's been a long downtrend. Yeah. Okay, so the CEO, he's going to retire in May after a 40-year career. Imagine that. Wow. That's pretty cool. Big Blue. Let's go over to Big Blue, because Big Blue is definitely a good clue as to how that Dow is going to react. And see, Big Blue can't get going. Big Blue came off that $211 mark. It's down to $1.85. Dead cat bounce. Nothing to it. And those, you definitely want to put those babies together.
Yeah. So the
Apple's
the big bounce, up $25.
Oh yeah. There's poor people that will either in Apple or buying Apple, or they got them out of Apple on Friday. Because what happened is that on Friday, I was watching the market, and it's like, oh man, look at them get them out.
Yeah.
It was disgusting, really. But it was, because I could see. Because what happens, which is sad, folks, there's no doubt, it's you see something come down from 700, and it's getting trashed and hitting the swing, and I can just see people throwing in the towel. Which they should have thrown in the towel a long time ago. But I can't stand that when I see it anyway, because I know how much money's being lost.
Yeah.
And now it's going to bounce. It's going to be a big one. And it's going to be a big one. Now, there's two different things with Apple, folks. What happens? It's going back to these lows. Don't get excited about Apple.
Yeah, you get a big high volume low down.
You get a high volume low, and this too will bounce further than anyone thinks it's going to.
Yeah.
Isn't the market deviant, man?
Hey, it's Thanksgiving week.
Thanksgiving week. Beautiful thing. Steve Rhodes, Tom O'Brien, we appreciate you growling and prowling out here with us, folks. You stay right there. We get Basel coming up next. Dow's up 156, NASDAQ 44, S&P's up 21.
Have a great day, folks.